Today we're going to be talking about why market moves and where does it move to. If you do not know why market moves or where is it moving to, you do not know trading. And a lot of people could be like, confluence is this, confluence is that. You can only have fair value gaps at a certain amount of time. Equilibrium, all this order blocks, all of this shit, break of structure. But if you don't know where a market is moving or where it's moving to, you really just shouldn't be trading. Right, so let me fix this real quick so I can get a little bit better here. Okay, so let's get into it. So why does market move and where does market move to? And this concept is actually really simple, and if you got this, you got half the battle of trading, right? So I'm actually gonna get a little bit more into how to put this together later in the video, but basically this is what it is. You find out where market moves and why does it move there. Once you figure that out, you're gonna wait for confluences on the 5-minute or 15-minute and then take your trade off of that. That is how simple my strategy is, NPB trade strategies, NTJR, and all these guys' strategies. All you got to do is just use it to each their own, right? But if you do not know this, you do not know trading. So there's actually 2 reasons why market moves, right? And if you don't know this, or you do know this, you should still watch. So why does market move and where does it move to? The first one is to take out draws on liquid. That means take out draws on liquidity, right? And then the second reason is to refill imbalances, right? So that is literally this is the half of the key to trading, right? This is literally the map to trading, and you just have to put the pieces together to get there, right? So that is how simple this is, right? So let's actually go over number 2 first because it's a little bit easier. So let's pretend we're in an uptrend, and I'll show you uptrend and downtrend version of this, right? So okay, this is the market. What are we clearly in? An uptrend. If you didn't know that, do not trade, right? So if you didn't know that, I'll make a video on that later, right? So let's just say this is the overall trend of the market. This is how we're moving. This is basically what we're doing, right? So this is obviously so sloppy, but still, right? So I don't think any uptrends look like that. So like more like that. All right. So let's just say we see this here. Let me just build this. Let me just build what I'm trying to teach you, and I'll teach you it from here to here. Okay, that right there. Okay, boom. So let's just say we have a fair value gap right here, right? And let's just say most of the time we're looking for this at the 1 hour or the 15-minute. We're really looking for these fair value gaps, not the 5-minute, not the 1 minute, and not the 4 hour, not the day, right? So that is basically it. So let's just say we have this fair value gap here, right? A price has been going up for, let's just say, all day. Like a London session, it went up, and Asia session, and then London session, it went up, right? So let's just say, right, so we're going up. But New York session, obviously, New York session wants to sweep this, but we need to know, before you take a trade, you need to know where price wants to go. So, right, this is one example. This is refilling imbalances. So let's just say price can still go up from this point, but let's just say we start seeing, what we're looking for in the market, right? Let me just find the path key again, right? We come here, right, and let's just build this off of here. We see, oh my God, we just inversed this fair value gap. Oh my God, we just created this fair value gap. Oh my God, we just broke structure. But you're not going to take a trade off of that if you don't know where market's going, right? So market, you need to know. Basically, that's what you need to know. So imbalances in the market are fair value gaps. Most of the time, people use fair value gaps, and ICT use fair value gaps. So fair value gap is an imbalance in the market where price moves and doesn't retest. If it retests, it's over. If it retests, it's over, and if it retests and leaves a rejection wick, that is considered to take out draws on liquidity. But to fill imbalances is to retest old stuff that we didn't test already. So as you can see, this was not tested. If this was moved down here, then that's a different story, but it's not. It was moved up here. So that means we never tested into this fair value gap. So that means we might want to come right here, make a downtrend, start coming up and down. Now we get our downtrend confluences. Boom. Take this out. Boom. That's a draw on the liquidity right there. Boom. That is somewhere where you would hit your TP. And then you can obviously do this right here. Oh my God. Okay. So let's just say, actually, this is very unrealistic. Let me put this up here. Boom. So we just, oh my God, we just broke structure right there. We just broke the structure. We inverse bullish, respecting bearish. Let me take shorts. You're not just gonna absolutely blind out shorts. No, you're gonna take the short. You're gonna put it at the imbalance, and you're going to leave this at the highest high. Boom, that hits TP 90% of the time. So we are refilling imbalances. We are refilling prices in the market or volume in the market, right? So obviously, I don't know if there's... I'm not sure, guys. Please stay with me here. Okay, boom. Right, this is also, I don't use this indicator, but a lot of people do. This means there's an imbalance in the market. I don't really want to confuse you guys. I'm actually going to stay off of that. My bad. Okay, but let's just say this is what we're doing, right? And we are, we hit this point and price wants to change. New York session wants to take out all these lows. But I would not put that there if this was retested. This might not even go there because we already retested this, right? So there's no point, right? So if this was retested, that's not a to refill imbalances. That could be a draw on liquidity depending on everything, But this is imbalance. This could be a draw on liquidity. Imbalance could be a draw on liquidity. So that's kind of what it is. So let me try to show you a little bit more on the actual market here. It's going to take probably a minute to find. So bear with me here. Please bear with me. Okay, boom, right here. So obviously we don't know where market's going to go, but what do we have here? We have a massive imbalance in price right here. Massive imbalance in price. Right? You could also do this for value gap here. Right? And it doesn't just have to be at the bottom, right? So that's what a lot of people misconcern this for. So this is an imbalances price as well, actually. Opening gaps, right? So if you don't know what that is, that could be a new week opening gap or a new day opening gap. And what that is where price splits, right? So let's just say here, boom. What is price doing? Price splits, right? It's splitting right here. Oh my God, this is a new week opening gap. What is price most likely going to want to do to fill this imbalance? Come down. And most of you guys probably could have just taken shorts like this. You should obviously always wait for confirmation, but that shit would have just banged TP every single time because you're waiting, obviously. Boom, right there. You just absolutely smack TP right there because you're refilling imbalances, right? So what can we take out of this? Let me just... Yeah. Okay. Whatever. Okay, so that's obviously a good one too. You got a new week opening gap or a new day opening gap. Boom, hits it and then comes down, right? Obvious. So let's just say... Let's get a little bit more of an obvious one. So let's do this one right here. Obviously, this is on the daily time frame, so it's a little bit more exaggerated, but still. So let's just say, boom, we have this. What do you have? An imbalance in the market right here. What is price going to want to do most of the time? Tap right back into that to fill that imbalance and to either push down or push up. In this case, we pushed down, came up, pushed down. Right, so that it's literally that simple, right? So you're just refilling imbalances and all that, right? So what could be under refilling imbalances, right? So we have FVGs, new week, new week opening gap, right? All those gaps where there's no candle to retest, right? So basically, to sum it all up, places to retest. To retest with no volume, right? So that's basically what that is, right? You're retesting with no volume. So there is no volume, right? So right here too. Actually, this is a perfect example. Oh my God, this is actually perfect. I don't know why I missed this. Before we start coming down. Right here, this is a perfect example. Listen up, folks. Okay. Right, so what do we have right here? We have a fair value gap, right? Let's just say this didn't retest, right? Which it really didn't. You come up, we're in an uptrend. What could price want to do if we get confirmation? Price would probably want to retest this, fill this, if not touch it, right? So obviously, we touch it. We don't have to fill it all the time. We touch it, you know what I mean? So that is also a common misconception. People put their TP at the bottom here. Sometimes it will hit, sometimes it wouldn't hit. I like to put mine, in the middle. And if it like hits it, the second it hits it, I would just close, right? So boom. Now we're gonna go into a little bit of more of a elaborated one, taking out draws on liquidity, right? So it's just a little bit harder. Where did my text go? Guys. We'll just go on the daily. Okay. So let's just say this, right? Now we're going to give a good example. All right. And then we will come back and redo if you guys do not understand. So we come here. Actually, okay. This is market, right? This is what the market is looking like. Let's just say you hop on market and this is what the market's looking like. Obviously, so there's one of two things happening here, right? So obviously you could see there are two types actually. We have either refilling imbalances or taking out draws on liquidity, right? But also to back onto refill imbalances, just because there's a gap here doesn't mean there's an imbalance. You have to wait for a fair value gap, right? Or a new week opening gap. So, right, so we hit this, right? And let's just say we're looking to take another trade, right? And we fill this, right? And all of a sudden, now we're like starting to disrespect stuff, right? And obviously, price can hit there and just keep going down. So that's why you have to use confluences, right? So you can't just use this without using confluence. Like price might hit this and just hit dump, So you gotta wait, guys. So let's just say market opens right here, right? So market opens here. We come up. Okay. Ready for this, guys? We got London session here. And Asia session here. Right, boom. So we have London session here, Asia session here, right? What could we clearly see? We have a London session high. We have Asia session low. Right there, yeah, so boom. Right, so what is pre-market do, market do? We come down, boom, we take out Asia session low, boom, beautiful. Maybe refill imbalances, right? So where does price want to go? Let's just say all our confluences are turning to now the bullish side. Where could price want to go? Price would probably want to go to London session high. That is a draw on liquidity, right? Boom. Then all of a sudden we take this out, we absolutely, hit right here, That is a draw on liquidity, right? So there are so many types of draws on liquidity. It's actually like insane. And there are bitchy types, which are not really draws on liquidity. And there are actual types. And I'm going to go over each and every single one today. So this is going to be a little bit of a lengthier video. But it's okay. Right, so boom. Take out what are draws on liquidity and what types are there? There's session highs and lows. These are the ones I use. Session highs and lows equal highs and lows. There are previous day high or previous day low. There are rejection wicks, right? So these are the main ones you can use. Obviously, everybody's strategy is different, so everybody's strategy is using different ones, right? So we're gonna go over each and every single one. Session high and session lows are literally Asia session high, Asia session high, Asia session low, London session high, London session low. Yeah, I think that's it. Asia session high, Asia session low, London session high, London session low. That is literally it. Wait, now I gotta find my fucking text again. Guys, someone please help me with my text, please. I literally can't find it. Oh my god. We're gonna go on the 12th month and find this hoe. Guys, I apologize here. Just give me a minute, guys, please. Alright, so we know what it is, right? So we know what the draws on liquidity are, right? So we know that we have session highs and lows, previous day high or previous day low. We have rejection wicks, right, and equal highs and lows, right? So this is literally like the big behemoth of draws and liquidity. So what that basically is, session highs, session lows, Asia session highs, Asia session lows, London session highs, London session lows. Previous day highs or previous day lows is literally exactly how it sounds. Yesterday's high and yesterday's low. Rejection wicks. So this is a little bit more confusing. And I know we're flying through this. We will come back to every single one of these, right? So that is, let's just say we create a fair value gap here. We're in an uptrend and boom, we just hit it and bounce right back up. So okay, that is this. So we have, and there are two like kinds of rejection wicks actually. So we have, let's just say this, boom. What is this rejection wick? We rejected off this fair value gap. This could be a key draw on liquidity, boom. And then later in the market, we might want to come back down and hit this, right? So that's also something you could do. Or a rejection wick could look like this. And then we come up, and then we could obviously always come back down and come back up. Boom, like that. That could also be a possibility, you know? So you always have different possibilities of all that. And I will show you each example. Equal highs and equal lows. What is that? That is when market does, again, where the fuck is my text going? It's fine. Okay, so that is when, okay, so let's just say we are in an uptrend. What the there we go. Boom. So we're here. We're here. Boom. This hit the same point in price right here. So boom, those are equal highs right there. And then equal lows is literally just that, right? So that. It's literally equal highs and equal lows and all the spanky stuff in between, right? So just like this. So now I'm going to look for it. So on these key draws, you know, you can look really anywhere. So let's go to, boom, right here. This looks mad confusing. I'm sorry, I apologize. I don't know why, what is going on, why it looks like this. Let me go on the 15-minute then, because this is not what I use. Alright, we'll just take this out. So, boom. So Tokyo session is Asia session, right? So that's basically it. So, boom. So what do we have here before New York happens? This right here. This is when New York session opens. So what do we have? We have London session high. And so once one gets taken out, it's over, it's done. So this is this right. Hold on. Asia session high is not a thing because we already taken out by London. So, but London's Asia session low is still up there, right? So, boom. Let's see how this plays out. So, let's just say we're here and we're waiting for a confluence, and we see that we have, boom. We just hit this right there. Boom. We take out that session, and where do we go? We take out this session. It's literally that simple, guys. It's literally that simple. We just take out the sessions. As you can see, we hit, boom, session opens. We take out the lows, take out the highs, and now we're off to the next one. We're here, same thing. So what is this, guys? Little pop quiz in the middle. Opening gap. What is this? What can this be? An imbalance. What do we immediately do? We tap in it. Literally that simple, guys. Please bear with me here, please. So yeah, that's literally trading session. So what is the next one we have? We have previous day highs and previous day's lows. Do you want me to teach you the hardest way to figure this out? I'm just kidding, guys. But you're literally gonna come here. You're gonna click on this, and you're gonna click one day, and you're gonna literally small down the candles, literally to retarded size. And what are we gonna see? Previous day high, yesterday session there, and then what do we see here? Boom. Now most of the time we are not hitting out both, but most of the time we do hit out one unless we're in a point of consolidation. So right here you can see we're in consolidation. But here we're just, see, this is one of a kind where we take out both high and low, but most of the time we don't, which is obviously okay. But, you just take it out. It's literally it. I really don't think you're that retarded to where I need to break that down. But rejection wick, I'll go into that, and that is all over the charts all the time. So let me just show you that. Right here, we are filling this imbalance, guys, by the way. Filling this one too. Let me see. There's not, let's check on the 1 hour. There might be a little bit more of a dramatic candle here. And please bear with me, guys. Okay. That doesn't really work. Let's check the 4 hour. Perfect. So what do you have? We have this massive imbalance in the market right here. What do? We tap off of this. This is a rejection wick, guys. We rejected off price. We did not fully hit price. And then what do? We go up. And then what could this also be? This could also be a key draw on liquidity, guys. We can also come down. Hit this. And go up. Or we can come down. Hit this. And go lower. Right? So this is where price could want to go. Obviously, each of these have to have a confluence, which we'll be getting into a little bit more later. And then equal highs and equal lows. I think you kind of just saw that, but obviously this is a little bit easier to find than a rejection wick. Usually, I don't really trade rejection wicks, but a lot of people do, and I feel the need to show you. No. That's a one. This is one right here. Okay. what do we have with price? We literally are hitting the exact same point, if not more, if not less, but kind of the same point twice, right? And obviously price did not hit this, but this is a key draw on liquidity, right? We might want to hit this some point in the future. We're going to hit this spot, you know? That's equal highs and equal lows, right? So let me take you back, right? For our last, sorry for the dogs barking. Okay. Okay, guys, so the moral of the video we have here is why market moves. Let's go. Why market moves. Imbalances and draws on liquidity, right? So this is literally why the market moves. And if you do not use these right, they could not become right. You know what I mean? So what I mean by this is if imbalances are not going to get filled every time, and that's why you have to have confluence behind it. If you take this video and run, you're going to lose trades. Just because there's a fair value gap that has not been hit in the market does not mean you absolutely put your take profit there. No, you have to have confluence behind that, which we couldn't get into in another video. Comment that below, by the way. Their confluence could be fair value gaps. They could be break of structure, inverse, all of that shit, right? Or for drawn liquidity, oh my god, Asia session high, Asia session high, I'm gonna hit that. We might not always hit that. We might not. Right, so take this video with a grain of salt, and I hope you guys learned something. If you did, like,